Hello, my name is Madison Firstman, and today I'm going to be talking about private placement offerings, term sheets, and what due diligence is. Let's begin. So what are private placement memorandums? Well, they're very similar to what a prospectus is, and a prospectus is what a firm would put out into the world when they're issuing IPO. But a private placement memorandum is for the issuance of a private placement offering. So private placement offerings are used to issue restricted securities. Restricted securities are not available for sale on the open market, which means they are not available for sale to the general public. Now, essentially what a PPM is it's a lengthy document that acts as an offer to sell a restricted security to a potential investor. It's similar to a business plan in that it includes a very detailed overview, but it has several differences. For example, it's descriptive and objective and factual in nature. It's supposed to be as accurate and complete as possible. So there are several components that a PPM has, and it serves several functions. Essentially, it gives an overview of the entirety of the business. It describes the qualifications of the management team. It describes the status of the business's operations, its past and current financial performance, the demand for its products and services, its future growth opportunities, the terms and conditions associated with the offering, relevant risks and disclosures, and so forth. There are several components, as we mentioned, to the PPM, such as the business executive summary, offering summary, risk factors, financial statements, use of proceeds. All of these sections contain some of the detailed descriptions that I just mentioned. So it gives an overview of the business, talks about the financial data of the business, what it intends to use the private placement offering proceeds for, which generally is to fund capital expenditures and the day-to-day operations of the business. Now, let's talk about the advantages and disadvantages of restricted securities. Why would a firm choose to issue restricted securities as opposed to IPO? Well, with restricted securities, you avoid so much red tape. Issuing IPO is an incredibly complex and complicated process. It's time consuming, but issuing restricted securities is quicker, it's easier, and firms tend to attract more knowledgeable investors who can support the business a little better down the line. The disadvantages of this being that you limit the number of potential investors and you face more pressure to get higher returns because investors are incurring higher risks. Now let's talk about a term sheet. A term sheet is sometimes given in addition to a PPM, or sometimes it's included within a PPM. Essentially, it describes the terms and conditions of the product offering. Generally, it is not legally binding, but it gives an overview for investors as to what they can expect if they choose to enter a legally binding contract with the firm at a future point. So this describes the issuer, the firm, the offering, what exactly is being offered for sale. Are they, shares? What's the price per share? How many shares are available for sale? What is the legal recourse that we are going to go through if we enter a dispute? In some cases, it's arbitration. Now let's go ahead and continue to the next slide. All of this to end on the concept of due diligence. When one is doing their due diligence, they're exercising their reasonable and prudent care in verifying the facts. Investors should ensure that the financial data and all other relevant information that the firm has included in their PPM and term sheet is accurate. Similarly, business need to ensure that the investors that they are engaging in are qualified and meet rules under Regulation D that would allow them to sell restricted securities. Failure to engage in due diligence can result in fraud, criminal and civil liabilities, risk of serious financial loss, and much more. So it's important to do one's due diligence when engaging in any sort of business transaction. Thank you so much for listening to the presentation. I appreciate it.